Upstream, are you with me? Under rainbow, curtain in the city, ocean, around me, downpour. Upstream, are you with me? Feeling
Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday, making it a couple of minutes past UTC. Really big shout out to everybody joining the stream live today, as well as everybody, obviously, that watches this on recording. So we've got a lot to digest today. And actually, for me, as somebody that normally approaches the market, or certainly what you guys see in the public eye as much as anything from a technical perspective, there's obviously a lot of news to digest around the tariffs as well. Okay, so there's a few things that I really want to kind of go through, but I think really to just kind of start this out, I think a lot of people either don't understand this, didn't see it coming, aren't really sure what it means, what impact it's going to have. And while we're kind of still digesting a lot of that, there's some really key points that we should be taking into consideration. So I really do want to kind of look at those, because I think, you know, sometimes it's very easy to just get stuck deep down that crypto rabbit hole, and then you wake up, you know, to situations like this that we've had. Now, I'm not saying that this was predictable, but I am saying these are discussions that we've been having internally at the Bird Nest for a while, just based on the economic data and potential actions, obviously off the back of Trump. So I want to just spend a little bit of time kind of going through that, what it means, how we kind of play that in, what does that mean for our outlook as well. Just Pitt, my brother, how the devil are you? Calvo, great to see you as well. MJ, I bought ETH, XRP, Quant, and Link. Anyway, Trump and Trudeau meeting this morning. Hopefully they work things out and everything goes up. And Floki. Yeah, I think, look, we've been talking about this as well. It very much depends on what your kind of strategy plan is. This is very much at the moment a let's keep away from leverage and let's look to buy quality. You very rarely hear this in crypto. And when I got involved in the markets, one of the biggest things that I learned from the very best traders, or more so kind of on the investment side, but trading as well, is, you know, is buy quality, as markets flight to quality. You hear those terms said quite a lot. A flight to quality, a flight to safety. What do these things mean? Well, we're going to take a look at the dollar index shortly as well as the bond markets, right? And I want to kind of discuss what I don't think a lot of people are going through, which is why the dollar is this real safe haven bid at the moment compared to bonds, because we're not, excuse me, we're not seeing the yields move. You know, it's very much a front end move at the moment. So what does that mean? It's the shorter term yields that are moving. Why is that happening? We need to decant Trump's tariffs, the fact that there's been a threat towards EU tariffs going on, or in fact, actually a promise. You need to look at oil, how that's being affected. You know, Trump's made some pretty wild claims as far as I can tell, because you know, from my understanding of the data, the US imports a lot of oil from Canada and also from Mexico, as well as a lot of other goods, right? So we need to look at that. Trump's been saying that the US have plenty of oil, but not necessarily the right kind of oil that they need, all right? Because obviously it's graded. So there's a lot to read between the lines. There's a kind of thought process here that Trump is imposing these to bring, you know, to bring people around the negotiating table, you know, as our good friend MJ says up here, you know, Trump's meeting with Trudeau very soon. I'm sure there will be meetings with China, although obviously that China level, there's a little bit more hostility there. You know, you would have an expectation of Canada and Mexico coming to the table, which again is a surprise why they've both been sanctioned with 25% tariffs and China only 10. So something we need to factor into that is China already had 25% tariffs imposed on them previously that were still upheld under the Biden campaign. So this is 10% on top of that. But the loophole that I think everybody's missing out on, and this is courtesy of Lisa, one of the analysts from Bloomberg, who I was listening to this morning, which is a really, really good insight into this actually, is there's actually closed a loophole here where I think products under $800 import cost there was a loophole for them to get in from China for missing the tariffs. Now that's been sewn up. Tariffs are across the board on all goods. So it's going to be really, really interesting. So, Elisha, good morning, my friend. Craig Parker, how are you doing? Unknown investor, Sendor is green. Okay. Yeah, I think beta risk assets are going to really struggle in this environment for a little while. But, at the end of the day, it's what you kind of believe in the projects, the teams, the communities, right? This will provide good opportunities. It depends what your horizon is. Is your horizon the next few weeks? Probably going to be quite turbulent. Is it months? Is it years? At the end of the day, for me as an investor, unless I'm punting on certain things, memes, bits and pieces, which again, I'm always open with anything that I invest in. But I'm also very, very open in the fact that it's a very small fraction of my portfolio and one that I look to be very, very nimble in moving in and out of. Whereby if I'm buying stocks, for example, or if I'm buying crypto, so for example, Bitcoin, obviously, Ethereum, another one. Another one for me, really good AI projects, AI agents, that's not just going to go away now because of what we've seen, right? These things are still going to come to the floor at some point. So for me, I want to use opportunities like this to get good exposure to it, but they have to be projects at the moment that I'm happy to continue to buy lower down. We're seeing a lot of pressure come into the stock market, come into the equity markets. You look at the NASDAQ, you look at the S&P 500, the immediate hits that they've taken. If you look at the CME gap, that we've seen come out and, the US market is yet to open. All right, we've got an hour and a half before the pre-market hits. So we're going to see a lot of repositioning happening in there as well. So at the moment, it's just all about kind of just having this calm and measured approach. Look, I got my high risk portion of my portfolio has been hit as hard as anybody's, right? So I made the conscious decision. I sold when I sold some of my assets, which I always do. I'm never somebody that just holds these things for Valhalla. It's just not the style of investor that I am. I have a lot of respect for people that invest with that kind of dedication, but at the same time, the very best people that do also understand that they're exposed to a high level of risk. So for me, I'm glad I trimmed some projects when I did. I'm, a bit mad at myself that I didn't trim others as much as I should have done, because looking back and hindsight is always 2020. I kind of knew at the time that I should have I should have probably trimmed a little bit more. But something I was discussing with one of our members this morning that I thought was a really good point is kind of how we dissected, or how we digested, the Trump news, the very first crypto or pro-crypto president. Very, very difficult to take unprecedented situations and then judge how they act with the market, because typically what you will hear is, market cycles are the same, buy the dips, etc. Fine. But the truth is that all of this data has to be factored in across markets. And as much as crypto people, or very crypto-centric people, think that market acts differently or kind of is within its own little microcosm or its own little ecosystem, it's really not. When the risk bid starts to get trashed, the major players in this space, your big institutional commercial entities, your funds, your banks, etc., aren't going to be holding a lot of crypto on the balance sheet, right? They'll look to accumulate at the lows, of course they will, but their exposure to risk is going to drop. So I want to kind of look today at a much larger picture, because after speaking to a lot of people this morning, speaking to a lot of obviously floor traders and that as well, who I know, when the stock market opened this morning in London, for example, that that shock had to be digested, and we've got some very, very good people here. A lot less of them, unfortunately, because of Britain's ridiculous policy, but that's due to the idiot politicians, certainly not the financiers. Yeah, very, very good people here. And there's a lot of mixed opinions on how this is going to play out. Goldman Sachs, for example, are very much of the opinion, and listening to their update this morning was super interesting. They think that there's a bit more pain and turbulence to come off the back of this. The automotive industry going to take a really, really big hit in the US, for example, but also oil, when you look at the effect that that's going to have on the Midwest, because they're the largest importers and most reliance on the oil coming in from Mexico and also from Canada. So with all of this, what do we always want to do? Well, the first thing that I just want to say to everyone is just it really, really pays to kind of zoom out. Also as well, good morning, Crypto Edgar, Erica, Knit, Whack. How are we all doing? And Alicia, thank you so much. So there's a few things that I wanted to do, right? And the reason that I've actually started here on a low time frame chart is I put a post out last night. So I wrote the Bitcoin report on a Sunday. I had the pleasure of doing that for the Bird Nest, and I absolutely love it, to be honest. maybe a little bit geeky, but it helps me kind of get myself aligned for the week ahead. Now, let me see. I think basically I just ended up drawing loads of stuff over the top of that, but we will get the gist here. Now, as we zoom out, and in fact, let's just get rid of all of this for a moment. Okay. So what are we trying to digest here? Quite simply, looking at it on a weekly scale, this was the concern for me, right? We can see the level capping the market very clearly, right? Previous all-time high, 108,351.99 here on Bitget, all right? But this is the high. Price came up here. We had a major swing failure here. Then price set this engulfing candle, which closed out the week, right? And now, starting this week, things were always going to look a little bit ugly. Now, I'm not saying you could predict that you would just have this massive drop. Excuse me. You've got to remember these are weekly candles, right? And ultimately, we were down here at a point of support. We got the weekly order block. We'd come back into this. So the play was very, very simple. We want to see how price reacts at these key levels. This is looking at it purely from a price action perspective. Now, for example, when we look at this, price's reaction at this high, a key point of interest. All right. Duncan, hello, mate. Yeah, flight to safety. You know, I mean, also quality as well, right? Excuse me, guys. So it's got a bit of a chesty thing going on at the moment. I had some sunshine here in the UK yesterday, obviously not shock to the system. So look, when price came above here, look at the long upside wick and how price closed comfortably back underneath this high, but also well within the range of the prior candle. Now that just gives us a little indication that there's some weakness there and that price is failing to gain acceptance up here, meaning that people do not see it as value up there. It then means that price is typically going to work its way back to an area where it was considered value or is considered value. We look at these order blocks here, in this case, a bullish order block. So for my interpretation of this, or certainly how I use it, I'm looking for down close candle. That means a bearish candle. I focus on the top of the body. All right, then I need to see price close above the top of that body. Then for me, that becomes a really key area of interest. The next thing that made this very of high interest to me was that we'd swung this low here, right? Closed above this, meaning this order block was set after liquidity was taken. Now that always gives a little bit more impetus. That always gives us a slightly higher probability here for this order block to hold. Now, we obviously can't factor in for news. No, price action doesn't predict the future, but it does tell us levels at which we want to be paying attention and where we want to be active. So for me, how we close in here was very much of interest. Now, the next thing that you will see on the chart is this dotted line here. That simply represents 50% of the order block here, from the top of the body down to the bottom of the wick. So for this week to play out, holding this kind of area here, I think would be relatively bullish. Now, we obviously have a lot of data to wash through here, so we're going to move down to the daily just to take a look. And also, I think that one of the key things that I wanted to kind of stress today is, you know, the use of these kind of either areas of mitigation, but especially the use of order blocks or supply and demand areas, and how we can utilize that to kind of help align ourselves with bias in what can often be a very, very changeable market. So applying the same rules that we do with our order blocks, focusing on the bodies, we can see here, and this was the point that I raised yesterday, obviously Sunday, we had closed on Saturday below these two up close candles, all right? These two up close candles had also taken liquidity from this daily high. So this becomes a high probability bearish order block. Once we close below this, we look to this area to be retested and for price to sell off lower. The targets were really, really clear. It was the swing low over here, right? And then obviously we're driving deeper into this weekly order block, which we can see over here. So we've got the 50% of that order block. So that's the area of interest. Now, one of the things I'm then looking for is how price reacts at the lows and highs, like we discussed previously, right? So we had a really key low here. Why is that a key low? What does that mean? Well, it's an external range low, meaning that we had all of these internal swing or failure swings in here. This was the low that took that out, took liquidity. Then price broke above it, failed to set, however, the bullish order block, ultimately then confirming the bearish order block. Now, this low here has an abnormally long wick, which for me then becomes a great point of interest when we engage with this. If price, as I said, comes back below, we want to then see a long wick and price closing comfortably back within the range of this. Okay, we didn't get that. We got a very small bodied close underneath. Typically, you would want to see a little bit more of a larger body here to get that real confidence because we've had that larger drop. But we still have to have the bias here that price is going to be looking lower. Now, we have a small inefficiency over here in terms of this gap. If not, we have this really, really long wick here. Now, we can look to 50% of this wick, all right, abnormal wick. We can see that we've swept liquidity here. So again, almost like we treat an order block, we would look to the 50% of this to hold. But again, you know, we're Monday's range. We still want to see how this develops and how this plays out. So as we look at this from a more granular perspective, excuse me, what is it that we're looking for? Well, here on the 4 hour, I'm just looking for the same thing. While we're delivering, you know, bearish price action, I'm looking for two things. I'm looking for bearish gaps to reject price. Okay, you'll see these on my charts as gray. I'm just going to do the bearish ones in red and the bullish ones in green, just to give you that, you know, extra context. And then I'm looking for this. I'm looking at the order blocks here. So I'm looking for this to keep price pushed down. Yeah, I'm looking for this to keep price suppressed. That set here, do we close above that? No, we don't. What happens when we then close below the next one here? Let me just zoom in a little bit for you. Up close candle, close below, bearish order block, retest, price sells off, right? So all the way down, we're looking at what happens when price closes below these levels. Are we continuing down, or do we change? Do we change price's delivery? Do we change that state of delivery? Are we then taking all of a sudden the down close candles and closing above them? Now, this is a little bit of a tricky one here, because as we can see on the 4 hour, we've got this up close candle here. We would need to see price close back below this, you know, for me to then think, right, we're nailed on for coming down for this liquidity. Price ultimately has to stop somewhere. It has to seek something. And most of the time we can use that as utilize our liquidity targets for that. So right now, the play for me on the 4 hour becomes quite simple. Now, one thing that I'm quite interested in here is if we look at this 4 hour low, also a daily low, and let's just pop back to the daily very quickly, we can see it hasn't been retested yet. Yeah. Price came close, but we didn't quite get the retest. Now, these key lows, these key points, it become really interesting when you close below them to then look at price to retest that and sell off, especially if you've got a little bit of time between. Yeah. So price comes a few candles here and then comes back to this level. This level will tell us a lot. So if we expect price to snap back to this level, then the first thing that we want to see, or that I want to see, is price close above this down close candle. It's a very skinny order block. There's a little bit of a tricky one because it's in, you know, the realm of a much larger bearish candle or series of bearish candles. So that has to be factored in. However, if this candle closed above the order block, well, closed above this, confirming the order block, but then also closed above this bearish gap, inverting this gap, I would see this as an early stage recovery point to look at building some intraday long positions back to this level, and then really, really, really need to look at how price reacts at this level. All right. I hate it here. How are you doing, mate? Aussie Grow Me, good to see you, mate. It has been a while. I hope you've been well. MJ, are you expecting prices to go down even more? Yeah, so what I would say is, what I'm trying to do is remain very much open-minded on this. All right, that's not a cop-out, but that is, look, when you're digesting news like this, these massive drops, they often have a catalyst behind them. So there's two ways that we look at this. One, do I want to be shorting markets when we're already this low? Not really. I think a lot of late shorters get hurt in these kind of moves here. So where would I want to be short from? Well, I would prefer to build some intraday long positions from here to here. Again, should we get the parameters I just discussed, then look at conditions for breakdowns from this level, excuse me, back below. All of that is to really kind of focus our minds and our eye on, you know, dissecting what's happening in the news into the price action we're seeing on the chart. It's also looking at probabilities, right? So when we get to this level, if we see what we want to see at this level, for example, you really see price kind of get above it, we start building some structure here, then I'll be thinking, okay, well, the chances are that we could really be kind of moving up to some of these other levels. There's not really much of a test happened for that gap there, for example. So maybe we look to come up and rebalance that. When we start recovering structure, I'll start to get bullish again. But for the moment, I'm very much looking at this as any kind of move higher as a bearish retest until we start doing what we said, and still we start inverting some gaps, and still we start setting some bullish order blocks, and we also start getting into bullish price action, which is looking for market structure recoveries. Look, even from up here, what we'll be doing: higher high, higher low, higher high, higher low, lower high, break that lower low, the higher low, sorry, in this move lower and confirm the bearish order block. This tells us that there is a change happening in the markets, that we're looking for that corrective move lower. But we always want to align that with a higher time frame bias, which is what we always try and glean from the daily and the weekly charts, and sometimes even more so than that, looking at the monthly. We've obviously just come off of January's close, looking at those candles, the quarterly as well as the yearly, the 12-month candles. Now, we're not going to go into that detail here, or that kind of broader view, just because at the moment, we've seen this large move. Now we really want to focus in on, okay, a lot of people are hurting at the moment. A lot of people have portfolios that are bleeding out a lot. A lot of people want to know whether it's time to cut this at the moment and kind of lick your wounds and move away, or whether it's time to kind of be buying some more. What I would say is you need to be very in tune with the strategy that you're using and understand it over a large data set, over a large period of time, which most people don't do. So you have to ask yourself, if you're feeling overexposed to the markets right now, if you really are feeling the hurt, what is that hurt? Is it the hurt of, okay, I'm overexposed, I'm about to lose money, I can't afford to lose? That's the last position you want to be in. And if you're in that position, all I would say is make sure you're never in that position again. All right. Ultimately, investing, trading is incredibly risky. So you should really never, ever be putting in more than you can afford to lose. You have to strip away, the noise from a lot of these people on Twitter and YouTube saying, sell this, do that, all in, blah, blah, blah. Look, it's just far, far too risky. Trading, investing is always a long game. But if you are hurting right now, this could be one of the best lessons that you ever learn, right? So just want you to kind of take that in, because it won't feel like it at the moment, but this could be something that completely and utterly changes your life moving forward when you come into these conditions or similar conditions again, and you're better prepared to react to it in a positive way. All right. I hate it here. Not Adrian, unfortunately, mate. You've got BC with you today. I am broadcasting across the wonderful Crypto Burbs channel, as well as obviously a TBN channel, but I don't have his magnificent dulcet Polish tones, I'm afraid, nor all of his wisdom either. But I know he's got some very interesting points on this. He's one of the calmest, most considered people you'll ever meet in the markets. In fact, we were chatting along with members this morning at the Bird Nest. He brings up these beautiful, clean charts, and he's just showing, look, Bitcoin still is in a large range, and we're just approaching those range lows. Yes, it's a time for caution at the moment, but also, the real savvy investors, and he is one of the best out there. You look at the positions, everything we do at TBN is transparent. So we have all of our trades, all of our statistics, everything. If you look at his trade record, especially, the levels that he has bought and sold Bitcoin for over, the last 4, 5, 6 years has been exceptional. So it just means it all points to levels, right? So let me stop rattling on about that. And one last thing that I do just want to kind of go through with you here, and just as to why I had this stuff marked on the chart, why I started with the hourly chart for us, was because I shared with members what my conditions have been on the way down for bullish reactions at these key levels. So just to show you really that it's just not all talk, there's always strategy behind it, and it's the very, very same strategy. Just going to delete these little bits because these were lower time frame executions, and we want to focus in on these. Okay, so remember what I said, I've got these key levels, they're marked out on the chart. These are the areas that I want to see a reaction. Now, I'm not just going to blindly long these levels. So what does all this mean? Well, it means that I said the 1 hour conditions that I had to get into any kind of bullish plays here, right, was that this thin line here that I'll just do, let me do that as a dashed line so you can see it. Yeah. So this is the down close candle at the time. Price had swept out this low, and we just had a slightly bullish reaction back above here. So the plan was, If I want to get bullish here, I need to see price close above this down close candle, which would set it as an order block that had just swept liquidity at a key level where we could look for longs. If we got those conditions, then this here is the area to start longing higher, back to these levels, which were our key areas of rejection. Now, we didn't get that. So what did this open up for? Well, quite simply, then when we closed this candle below, this line here, became our bearish order block, meaning that price retesting this area, remember, like I said to you earlier, bearish order blocks as well as bearish gaps, these are the areas that we can look to short. Okay, so these are the areas that provide us with opportunity. Now, there's always a risk that this is a deviation below a key swing point on a higher time frame. We climb back above this and fly. If we do, then we mitigate here. We're either wrong, we take our 1 hour hit, brush our hands off and say, well, now we're back above here. We're super confident that price is at least going to correct a fair bit higher. And then we're back in. Oh, sorry, I hate you here. Yeah, brilliant. Yeah, I think, look, it's all about finding some, finding some good people. People that you kind of align yourselves with, right? You typically want to stay away from people that are too shilly. Hard to get accredited in this industry, but Adrian's a CMT, Chartered Market Level Technician 3. Very few of those people in the world. Just shows that he's really done his time in the trenches. But we pride ourselves on having a professional trading community, right? We are a group of professional traders. That's all we do for income. So that's where we kind of focus based on that and based on education as well. And we obviously have, wonderful fundamental analyst as well who looks at the market from that side. I think one of the things that crosses all markets is this macroeconomic view, which is sometimes one of the hardest to get right, as things wash through. But we try and do what we do. We encourage anybody to come along and try it to see if it's for them. And if it's not for them, I'm sure there will be the right people out that really, really resonate with you. So for now, where are we? Because we can see here this morning, we finally got that first move, right? Now, we're not reacting at a key level. What we did do here, we had the down close candle. We've seen a couple of things here that give us just the first sights that we haven't seen in a little while of a slightly bullish resurgence. I think this could be price surging a little bit here, towards obviously close out of the London session. But we're really looking at this here as well from the perspective of New York. So the couple of things of interest here. One, down close candle, price closes above. That means this morning before I was active, certainly not much before, but slightly before, this was the long opportunity within here. So again, intraday, at that point, you're just targeting very small scalp positions up to this bearish gap. However, when we close this candle above here, funny enough, after reacting at this bullish order block here, then this became an inversion gap. And now this is something we're looking to hold as support. We start closing back below here, and especially if we close back below this, then price is almost certainly going to start making a move for the wick low down here, as well as the higher time frame swing low. So at the moment, am I interested in taking any long positions? Absolutely not. I think, that was very early here. It was pre-London market. Would I have taken those? No, because we still didn't know how London was going to open then at that point. This was 6 a.m. here. However, what I do want to do is kind of see these areas hold. Then we want to see this wash through onto the higher time frames. And that's where we ultimately want to start looking for our confirmation. So what I want to cover off with you guys from here as well is really kind of looking at our, let's call it our broader market view, right? So what do I mean by that? Well, we don't want to be so centric towards crypto here. We really want to kind of zoom out and see what the traditional markets are telling us as well. So that's what we're going to do. We're just going to flick across, take a look at the NASDAQ, take a look at ES, which is the S&P 500. We're going to take a look at the bond markets very quickly, as well as the DXY, and just see how we can decant this information to help give us a little bit of an early warning system for these things, but also look at how that then affects our playbook moving forward from here. There we are. Good morning as well. NBA Young Believe. Great to see you on here. Yeah, I hate you here. Yeah, good time. Very similar for me when I became majorly exposed to crypto, certainly around 2017. It is all about kind of finding those people, but it's very difficult to do so because there really is a lot of noise in this space, especially when things start to get euphoric. So we're going to move away from this now, and we're going to take a look. And what I want to start you on is the dollar. All right. So we're measuring this based on the dollar index, the DXY. So I have this set up in ranges that have treated me very, very well for a very, very long time. And these are just like any range. It's just looking at key points of engagement, support and resistance flips. And again, they're much more kind of areas. They're represented here as lines, but they're kind of more areas than they are lines. So for example, you would see something like this on my charts as well, where I'm looking at these key kind of pivot points, key resistance here, strong moves above, ideally with displacement, then areas getting treated as support. We then, close back below here. We would look at this area here for weakness to short this down towards the midline. You wouldn't obviously short the DXY technically. You're looking at this. This is, the dollar measured against a basket of other currencies that's heaviest weighted towards the euro. So what we're looking at this for is the flight to safety. What we're saying here is when the dollar investment is strong, it's that kind of safety bid. We're going to look at how that contrasts with yields across bond markets as well. It's really not as complex as you think. It's also not something that we would take entirely at face value. We're looking at this to paint a rather larger picture for us. Razoon, my man, how are you doing? And Jojo Lee always has a wonderful take on traditional markets as well. So for me, this area was absolutely critical. When we got back above here, we can see this was the beginning of last week. Another reclaim here, a deviation below a range low, a reclaim of this, and now ultimately targeting range high, which we've now engaged with. We've taken this high, but there's no doubt that we can see strength here in the dollar index. So why is this important? Well, the thing we're looking at here is, if you've got a really, really strong dollar market and investors are going heavily for the dollar, it can often mean that there's a little bit of a risk, or they're favoring more of a risk off bid. Crypto is very much a risk on asset. So we want to see environments that are key and promote the growth of risk markets. That's why we turn our attention to the S&P 500, right? And the NASDAQ. So let's take a look at those showing. Let's take a look at the NQ1 contract. And let me just get rid of some of this. Been doing some lessons on this last couple of weeks. So let me clean this chart up quickly so we've got a good starting point. Here we go. So ignore these for the moment, guys, just some measuring points. So as we're looking at this now, look what happened on the NASDAQ. So look at the opening this morning. Look at the gap. Yeah. So huge gap here to the downside. Now, what we've been seeing here with risk markets as well is they've been going through their own, part of turbulence here. You can see here again, super prosperous all the way up here. This was kind of just the pre-Christmas bid. Then you kind of see around, building into Christmas, it's natural for these markets to start to correct. Profits being taken. It's the end of the calendar year, right? So that's where we're really kind of moving this down. But then the real kind of key thing here is how the beginning of the year started. Now we've seen that, we saw that corrective move down. Then there's the excitement into the Trump inauguration, which everybody was expecting. A lot of people were saying, this is going to be the opposite of that kind of buy the rumor, sell the news event. And ultimately, it didn't really end up being any different. It did end up as a sell the news event. But we've also had other major catalysts come in. Now, as Razoon has said on here, I was hoping for a structure shift on the DXY. So either a move deeper, right? It's to take out this low from a lower high, meaning that we see price really kind of, start to come down. This is obviously the NASDAQ chart, right? So, Razoon's talking about the DXY chart, the same thing. You want to see that bearishness either in the DXY, which is ideal or becomes more ideal for risk markets. Now, at the moment, the NASDAQ is kind of taking the hit, and looking at this from a liquidity perspective, this level down here at 2763.75 looks really, really appealing. Now, it's not to say that we come straight back for that. It wouldn't surprise me at all. Obviously, we're going to see a reaction from the US markets, but if we still see this gap here as of trading tomorrow, the chances of price trading back to that gap, before moving down is definitely where I'm going to be focused. However, what we can see at the moment as well is that price, it is a little bit unclear, right, on a daily scale, because we've gone from higher highs, lower lows, lower highs, clear bearish trend down here till we broke out of this here. We've gone from a higher high to a higher low as well. Now we've gone from a lower high. We start seeing the NASDAQ pushing down, breaking this lower low, getting back into bearish market structure. That can always be a little bit of shaky ground. Now, why is it this? This is, heavily weighted with technology stocks. We saw a massive hit come in previously. This was like the Nvidia news, or more to do with the deep AI, China's progress on the AI front that really kind of shook the market from that perspective, because people expected the US to be so far ahead and out in front, with AI. China coming in and showing their proficiencies in that area, and also being able, to have much lower manufacturing and production costs, really kind of put the wind into the market. And why that affected the NASDAQ so heavily, as well as obviously the S&P 500, is that those stocks, Nvidia, are a really key part of that basket of stocks. So they'd also been propping up a lot of other underperforming stocks that were in that basket. So when you kind of rug came from underneath them for, whatever period, that then had ultimately longer lasting effects in the market. So now we're just digesting this at the moment. You will see that ES looks very similar as well. The difference that we've got with ES here, which is the S&P 500, is that we've swept out this low and we're reacting here from a bullish gap. We can see a little bit of a reaction here. So price closing here and then leaving this large gap at the close of play today would make me feel even more confident the price would be drawing up into this gap, either, for more shorts to come in here and drive the market lower, or for this gap to be inverted and ultimately starting to make plays on these highs again. I think the former is probably a little bit more likely at the moment, just while the market kind of dissects all of this news. Now, the other interesting thing that's here, and very interesting, we look at the US 2-year bonds. We can see here up 0.81%. Where the US 10 years are actually down 0.81% right now. Again, just back to a key level that we're looking at here. This was a really key point. We're looking at this in terms of percentage, right? So this is, the percentage return for buying US government debt. So this again is that kind of looked as that safe haven bid. Now, normally you would see this kind of wash through with the longer term bonds, right? But we're actually seeing the progress here on the US 2-year. And again, I think that kind of reflects the fact that at 4.5, people are now looking at the dollar more as a flight to safety, I think, rather than the bonds. So that opens a lot of interesting questions. Now, we're not going to cover it right now, but the other interesting topic here is oil, as well as the automotive industry in the US. The automotive industry, there's talk about an average of, I think, $3,000 to $6,000 being added per car, per average cost per car manufactured, right? And the reason for that is because of the tariffs that are coming in and what they need to import. So that's going to kind of have a bit of a squeeze. If we look at that, how that washes through into the economic data as well, we've got to remember, the difference between, the core pricing, when we look at things like PPI, and the regular is that's factored in with or without the automotive industry. So it's going to make for some interesting reading, and I think the Fed are definitely going to be scratching their head at the moment. So Jojo, afternoon, Yargo as well. How are you doing, mate? Jojo, it's bull flattening from what I can see. Yeah, I can certainly see that perspective. I mean, look, for me, I don't think we're going to see the kind of wash through of this for a little bit. I think what Trump's trying to achieve with these tariffs, unless it's kind of a bit of a larger all-round bluff to just try and get, better negotiating to the table, which, is definitely not against him. This has definitely been done with some of that in mind. But I think when you look at how this actually washes through for America, for the US in terms of manufacturing and import, I think it hurts them quite a lot, actually. So, Trump is saying this is short-term pain for long-term gain. It's going to be interesting how this washes through. But those kind of moves that he's talking about typically take years rather than months or weeks, right? So that's something that we need to factor in as well. But anyway, I thought that's really, really interesting here when we look at this across the bond markets as well. Now, I know this isn't why most of you kind of tune into the show. I do like to cover these things with you because I really do feel that they have far-reaching impacts. Even if you are only investing and trading crypto, it really, really pays to understand where this is across the market. And the other thing that we can see here as well is with gold, right? So, gold really, really, gold has just been on an absolute tear anyway, especially since we look at it back here again, similar kind of time, strangely aligned, with a lot of the Bitcoin and the risk market bids that came in pre-Christmas, but gold really started to go up a lot more. Jojo, Trump is a businessman. He's letting his business friends to buy dips. LOL. Yeah. What's the conspiracy? Okay. No, I think, look, Jesus Christ, I think probably the biggest insider trader in the US history is probably Nancy Pelosi, right? How the hell she's not in prison is, I don't know, just shows how corrupt the US system is, right? And that's not that I think we're any better here in the UK or most countries, but yeah, that's the thing that's always on my mind with this. It could be very true. If you're looking to buy into technology stocks, Apple's down today, Nvidia's obviously heavily down. You've got a lot of really attractive looking stock options here, as well as the fact that crypto, right? We can't, ignore crypto here. Major institutions wanting to get crypto on the balance sheet probably aren't going to want to do it unless you're Michael Saylor over 100k. For me, that doesn't really make a lot of sense. Craigie boy, how we doing, mate? Not if they can keep the dollar strong, they are still buying cheaper. Yeah, exactly. Look, the dollar's on a tear for a number of reasons as well. So it's, we need to kind of look at that and factor that in. That kind of data I think is going to wash through later. I think with a focus on crypto and risk assets, I think it's just a case of watching the market settle now and then seeing how these tariffs, are ultimately digested. And Jojo, I'm happy with my gold positioning from late December to now. Yeah, I bet you are. If you've been exposed to gold on the long side, then you're absolutely laughing. I know a major fund who were heavily short gold, around these levels a few times. And I don't really think that that's working out too well for them. Just goes to show you can never be right all the time. Of course, in fact, most of us are wrong more than we're right. That's why you just want to have those good risk to reward levels. Funky T, hey, how are we doing, my friend? So anyway, let's look. We've got strong gold. We've got a very strong dollar at the moment. All right. We've got the US 2s, which are continuing to climb a little bit, these factors, and we've got equity markets focusing on the indexes, right? The S&P 500 and the NASDAQ, which are low. So it doesn't paint particularly prosperous conditions for trading cryptocurrency at the moment. Investing, however, is a slightly different story because price, God, how many people were talking about Ethereum, right? How many people were just absolutely ready to bite your arm off for ETH? Yeah, just absolutely praying and begging for it to come to lower levels, right? Now, this totally touched, the low 2000s, right, which is pretty incredible even unto itself. So it just, again, some of this or a lot of this comes down to kind of what your long-term objective is here in the market. So if we really zoom out here on ETH, if we're looking for really key areas here, now, again, looking at this much more from a position of, key areas of buying and selling, I'm always going to focus very heavily on like key wicks like this, where you're seeing these violent reactions. We can see sell off in here, sell off here. We can see, obviously really big move here. This was a catalyst for a really big move through here. So while this line isn't perfect, and it doesn't have to be perfect, and in fact, like most things, it's almost certainly more, this, right, kind of thing than it is a line. There's no doubt here that these levels have led to strong reactions, and when they've been flipped, have led to strong reactions in the opposite side, right? So in and around here is definitely an interesting area. I don't think we took out this low, which did surprise me, but we did finally, as Razun, who's on the show with us today, and we've been having a good laugh for a while. We did take that. So we took both of them, actually, Raz. We've been talking about this swing low here. I didn't know if it got taken on Bitget, weirdly, but it does. It zoom out and it has been taken. We saw it was on Binance, obviously, right? But this low, Raz and I were both, we both trade over at the Bird Nest together, and many conversations about waiting for ETH to come in and take out this damn low, right? In this area here, this would have just been the perfect opportunity, a sweep of this low, starting this whole move to the upside. But we have, got that now. We're back in. We've taken liquidity from this low. We're holding this kind of key area of support. So now it's really a case of kind of diving into the lower time frames. At the moment, that's a very, very bullish reaction as far as I'm concerned. Look, Price has driven down into here. There's been a lot of buyers stepping in here. How long that holds for, or what we need to see in order for that to hold, is the next question. So focusing on the higher time frames here, this is definitely a key area for me. Very, very simple, very similar, sorry, to Bitcoin, right? We've had this strong reaction here at support. Now price is working its way back up. What we really need to see is price start to flip some of these kind of key areas of resistance. This is a bearish gap. So until proven otherwise, our expectation is for price to draw into these gaps, find a rejection here, and then move to seek liquidity lower. However, should we close above that gap, gaining the inversion, we look to this area to act as support. And we look for this area, along with the fact that obviously we would set this internal order block here as well. Because again, just like with Bitcoin, it's internal to these much larger bearish or down close candles here, but it would still be an initial sign. Price closing above here, we need to close above the gap as well as this. Then we have these other inefficiencies higher. We have these untested order blocks through here as well. So it's going to be a difficult and challenging period for price, right? But, we know that sometimes it really is just a case of accepting it and just understanding the key levels. So if we come back down to this level here, we now have this wick down here that we can look at. And we need to kind of look at that and say, okay, how do we want to react when we get back down here? Or how do we want to react when we're back above here? So for me, it's a case of looking to get involved long above these levels, or waiting for price to come back down to these levels. I would only really consider shorting this should you get some real kind of good confirmation setups. And for me, the first of those, and again, even this is a little bit tricky here. So on the hourly, what have we done? So get rid of that because that's not been confirmed yet. As we look at this, we're reacting at a higher time frame bearish gap. It's also obviously a large bearish gap on this time frame as well. We can see here this large gap overlaid here by the 4-hour gap. Now we've swept liquidity out from the high here. What you would want to see, you'd want to start to see some big bodied bullish candles really start to punch up through this area. What we've got here at the moment is we obviously had our bullish order block that was set down here, which is great. Down close candle, price closed above. Look, we got the retest of this area and we did seek the next point of liquidity, which was this high. So, the longs were here, right? Very, very much at the start of London here on ETH. Again, tricky trading the start of those sessions after you've had such, high impact news hit. But just talking about it in hindsight, they're certainly not trades that I took. So now for me, I'm seeing the reaction down here. I don't really expect this area to get retested again. If it does come back, then I don't really want to see price closing candles within here because I would see that as a sign of weakness. The other kind of question here, and it's not something that I would take purely because we're kind of, we're now, 40 minutes away from the start of the pre-market for the US Open, for the equities. So I would really be cautious here. However, seeing something like this with price driving up here, we're clearly in bearish structure. We've got bearish pressure on the market. We've seen a good relief bounce here. If price is going to struggle to get back above these key levels, then these are often very kind of key or interesting areas to short. So the first point that I would want to see for any kind of confirmation play would be this. This is the up close candle here. Price has taken liquidity. Price closing back below this here. I would then see that as weakness and price is going to make a move deeper into this order block here. I'm not really going to go into kind of entry methods and that today for anybody that watches the show or is pretty regular here. If I was looking to short this, I would need to do it from a key level first of all. So I would need to see price kind of come into a key level here. I would want to see a sweep. I would want to see price break down. And the key things for me here are seeing the sweep of liquidity. Yeah. So we've got that deviation. We've then seen the weakness by price coming back down, closing below the low that led to the high being taken. And then you can look for gap entries in here. You can look to returns to the breaker line or the breaker candle that's in here to short those because you know where you're wrong. Yeah, you're wrong above here. It looks like some kind of interesting hieroglyphic symbol, but not as intended. But looking for those confirmation plays, especially in market conditions like this, can certainly end up saving you a lot of capital. Now, I think in terms of looking at the broader kind of crypto market, if I just flick this open at the moment, right, what I'm looking at across here is, we can see pretty much everything is getting a bit of a pasting at the moment. You got a few outliers here. All right, a lot of memes, bits and pieces, some high risk plays that, illiquid, typically meaning that, smaller amounts of money can affect those in a much larger way. So, memes that have good communities, for example, people that are buying these dips can lead to those pumps happening. But, you really don't have to look very far for the broader market view that there is a lot of blood in the water, which also, by the way, does mean opportunity. So when we're looking for potentially good investments, and you're looking for things like, for example, people looking at CRV recently, FET, for the AI narrative here as well. But what does that mean? What are there opportunities to buy into these? So this is the time that you really want to kind of get yourself out. You want to zoom out on your charts and you want to say to yourself, okay, fine. Well, where are my buying opportunities on these? Like for one right now on FET, I'm really interested in this here. Right? For a spot play, definitely. Why? Because we're considerably down from the highs that we set. We're coming into a key area of accumulation here. Right now, you'll often just see me draw this as a black line, but this is kind of more of an area that I'm interested in. So you see this in blue. This was the down move that led to that massive expansion. When price retested this area for the first time, we got this large move off the back of it here. It tells me that there's some buying interest in here, right? And it also tells me that as I look a little bit lower, I can see these long upside wicks here. And let me just clear this up over here. Okay, now when I'm looking at these upside wicks here and here, and then I'm looking at the downside wicks here, if I'm looking at this initially from a point of support and resistance, I'm saying, well, actually this kind of becomes a really key interest. The wicks that we're going into here, the upside wicks, resistance, what happened here? Price, we got that strong move, right? We got an initial move above it and a retest, but then it's the retest here that then just led to that massive move. Now, you don't always have to have these tracing back all the way, right? But actually through here, you can really see some interactions as well. Now, yes, this is a weekly scale, so it is, obviously a very, very large area, but strong close above. Price tried to find support here, got back below. This is a bit messy, but ultimately close above, retest, price moves higher. When we lost this area, resistance, right? Resistance initially until we close above, then support. So these are kind of key areas for me. I'm happy to add some more FET here. I'm happy to add some more FET here. Then, look, if you start breaking down further, you can start to see some kind of quite key pivot points through the market here. Resistance, support all the way through here. Lost it, becomes resistance here. Back above, holds it as support. So it's just about understanding the levels that I'm looking to buy this at. But I then also need to overlay this with my fundamental size and scales as well. Roots, I don't really use log charts. I used to over the long term, mate, but it just kind of smooths things out a little bit for anybody wondering what the log charts are, like logarithmic. But yeah, I used to actually do a lot of my charting on that, but in truth, most of my focus these days is intraday. So I'm looking at these here for just those kind of key levels that we can get those buyers. So I'm happy to add more FET here. Obviously, once I've factored in those fundamental considerations as well. And just to show you one more that we just passed earlier, because I know this was, quite a hot topic not too long ago, I was looking at CRV. Excuse me. As we look back here on a weekly scale as well, this was a really key pivot point. All right, we came into this low. When we closed below this low, we saw it retested. This held price down for a while now. This is where I've got some bids for CRV. All right. I just think that once we had this large expansion past this area on a weekly scale, this was definitely a key area of interaction. If we kind of drew it out a little bit more as well, you could probably use it to include, say, this wick here. And it would look something like that. All right, key support. So this, is a key area of demand. People are happy to buy here. You lose this area, it turns to resistance. So retesting this area now. So I do think that this is a good level here for CRV. I think if we look at this on a daily scale, we can see that we're coming into this untested area here, this order block. Price closed above it here. We never saw that retested. So on a daily scale, that's been a big part in what has been triggered here. So let's label that up as our OBD. I mean, look, we're obviously a long way for any kind of major recovery here. We're kind of seeing a little bit similar as we have done on the others. We've got a much thinner gap here, but we would need to see that kind of closed above. Even on an hourly scale, I think we're going to see, you know, really, really kind of similar things across the board. Nice reaction here from the lows. Price came in exactly the same as we've seen on the others. Down close candle, order block set. We didn't get the retest here on this one, but, you know, we've got that bullish gap here that's kind of holding price at the moment. So while this continues to hold, remember the hourly really is the lowest of the time frames you want to be kind of putting any of this together on, you know, from this kind of perspective, not an execution perspective. You know, the lower the time frame, the more the noise. You know, we can say, oh, okay, this is looking like a great bullish recovery here on the hourly. You know, you move out to the 4 hour and it just really doesn't mean anything at the moment. So what I would say is these conditions for me, until we can kind of digest the data a little bit better, till we've got more information on the ground, I'm looking at these as, okay, what do I think are high quality companies? What do I think are high quality projects? What am I happy to invest in over the long time? Where do I think that, you know, if I'm looking at this time horizon as a, you know, matter of high levels of months and possibly years, who do I expect to be around? Who do I expect are still going to be making waves at that point? And does this give me a really good opportunity to get in here? Should we see that catalyst return quite quickly and we step back into those bullish conditions, you've got some good buys under your belt here. Again, you can't be risking more than you can afford to lose. It feels bad sometimes. You see these tokens and that pop off and you think, God, if I'd only 10x leveraged that, or if only I'd done this. But the problem is people often are less considerate to what happens in the other direction. You know, what if that move that you're over leveraged to wipes you out and takes away months and months or years of hard work, right? At least with the spot positions in the market, you've got to have that slightly longer term view, but it really does protect your exposure. Yes, I've got some really, really, really bleeding portfolio at the moment. Sorry, a really bleeding portfolio on the high risk element, but it's actually quite underpinned quite nicely with some good kind of stocks that have been working well for me over the time, as well as, you know, good exposure to things like gold as well. And while I'm not you know, a day-to-day gold trader, I am certainly an investor in precious metals, right? So it's all about kind of having that balance. If you're just purely focused on crypto, then right now, this is all about finding the quality companies that you feel like you would have really given your right arm for not too long ago to have exposure at these kind of levels, and use that, you know, to get some. But just, I would say right now, let's be patient. Let's see how things wash through. Let's not forget that we've obviously got the threat of EU tariffs coming in from Trump as well. We need to see how that's going to affect the European markets. We need to remember as well, there really is talk now of parity between the dollar and the euro, meaning that, you know, there's an expectation that in the not too distant future, that will be traded at 1 for 1. So $1 for €1, which has obviously never happened before, not to my belief anyway, not even into, it would have only happened an incredibly volatile move that I'm certainly not aware of. But things like that are going to have a big skew. Seeing how the oil argument washes through, you know, Trump claiming that the US have enough oil, which might be true, but they certainly don't have enough of the oil that they need, judging by their reliance on the imports that they make. We need to obviously look at how this washes through for inflation as well. You know, there's already talk that this could lead to, you know, a 0.5 percentage point hike, meaning that the Fed are going to have to reconsider their modeling here and take a look at that and say, okay, well, what's that going to do? What pressure is that going to put on the average American now? You know, because these tariffs ultimately are going to push prices up for goods for US consumers, which is obviously then going to have an effect on, you know, consumer pricing, the CPI, consumer price index. What are people paying? How much of a squeeze is the average American feeling with less money in their pocket? With less money in their pocket, are they willing to invest? And are they especially willing to invest in risk? You know, there's a lot that kind of needs to be decanted. I am going to be live with you all again on Wednesday, so please do stop by. About 5,500 people live with us at the moment, which is, you know, I always say this, I absolutely treat it as a blessing that you guys come and listen to me, you know, share my thoughts on the market. They're very much my own, you know, decanted from, you know, news and the years of experience that I have trading these markets, as well as the wonderful team that I have around me at the Bird Nest. So please do pop by on Wednesday. I think we're going to have some more data then. One thing that we do want to take a look at very quickly before we say goodbye for the day is to just take a look at the news. So let me just get this up for you. We're going to take a look at the news starting on this February the 3rd. Again, something that we always want to have an eye on. This is going to be very, very interesting. Obviously, we don't have any FOMC this week, right? But when that comes back in, I know Powell at the moment certainly going to be scratching his head. So let's look at these, because these are all volatility injectors. These are all going to, potentially play their part this week as well, adding, potentially worsening or lessening to the effects that we've had from the impact from the tariffs, right? So Monday the 3rd, we can see 3 p.m. today, ISM manufacturing PMI. That's going to be very interesting. Previous was 49.3, forecast 49.3. Let's see how that washes through today. I don't think the news currently is going to have any effect on that, obviously. This is going to be one for down the line. Then we move into Tuesday. We've got JOLTS job openings, right? 8.10 million before, and then that was put back down to 7.8 million. So they've revised that down in terms of their expectations. So lower job openings in the US, as well as the market conditions we've got. Could be a recipe for some volatility for sure. We have ADP non-farm employment change, all right. They missed this figure quite dramatically last time, meaning that they're now expecting 149,000. So that's a bold prediction there. If that doesn't hold up, we could see movement in the markets there. We also then have ISM services PMI on Wednesday a little bit later. So watch out for Wednesday. It's going to be a tricky trading day for sure. Now, on Thursday, we have unemployment claims coming through. 207 was the figure last time. They missed that as well. 214, they're expecting more people, so more unemployment claims coming in the US, again showing a little bit of weakness, contrasts with that strong dollar, right? And then on Friday we close out average earnings month on month, non-farm employment change, and unemployment rate. So every single day this week we've got some kind of catalyst coming in from the market, aligned with the turbulence we already have, probably in for a relatively volatile couple of weeks coming up. So please do tune in again on Wednesday if you're around. If you've got any questions, we will obviously, normally a Wednesday is our alt request Wednesday. So if you've got anything in your portfolio you'd like to see or hear my thoughts on, please do let me know, and we'll make time for that on the show, as well as obviously covering everything else that we do. All the information, if you want to find out more about me, about more of what we do over at the Bird Nest, you can find all of that down in the link in the description. So please don't hesitate to come and check that out. You can also reach out to me on Twitter at BC_Richfield. Huge thank you to all of you, Craigie Boy, Whack, Rube, everybody that joined us today. We had Raz with us today, our friend Funky T, Jojo as well from TBN, Craigie Boy, who's always popping through, Yargo as well, NBA Young Believe, I hate it, name always makes me chuckle, Aussie Gromy, MJ, Duncan as well, who was with us earlier, our wonderful Erica, Edgar, Unknown Investor, Elisha, Craig Parker, Calvo, my brother from another mother, Just Pitt, and one of our wonderful trading team over at TBN. Apologies if I've missed any of you. I know there's thousands of you that I won't have seen your comments because I only get the ones come through from YouTube. But thank you so much for joining in. Do come back on Wednesday. We'll look to decant this further. As for now, let's see and wait for Monday's range to play out. No time to be overly exposed here. Some good spot buys, I think, really could be coming up here, especially with an intent to DCA in lower down should we get the opportunity. But right now, I'm away from the leverage. I'm sitting on my hands. I'm watching this. I'm certainly going to have a very, very close eye on Bloomberg today as well to see what the experts' thoughts are on the markets and how this is looking to play through. Have a fantastic day ahead, everyone, and I look forward to seeing you on Wednesday or around the nest.